Friends, so I welcome you to the session on priority sector lending. So before we start this priority sector lending session, so let us go back to about 50 years before. So that is about 1968 and before. So all the banking sector was controlled by the priority sector. Either the banks were either started by the kings that time, the rulers that time, or the private sector, private industries. Industrialists, they have opened the banks. So naturally, so they were giving lending to only the companies or accounts where these kings and the industrialists had a stake. So all other sectors were neglected that time. So the banks are essentially the tools for the development of the country. But if the bank finance is given to only few people, few industries, so country will not develop. So the government of India, in consultation with the Reserve Bank of India, so they have they thought how to go about to take care of other sectors also, because the top industrialists and top industries, they constitute only 1.5%, 2% of the total population. So the rest 98% were neglected at all. No finance was given to them, neither to agriculture nor other small industries. They were not giving the finance to them. And these sectors, they do not have security also. So banks were not giving any finance to these sectors. They were mostly focused on the top industries. So until unless all these sectors develop uniformly, the country will not prosper. So banks, the Reserve Bank of India and the Government of India thought that there should be something should be done to rectify the situation. So in 1968, so Government of India has nationalized 14 banks, 14 major banks, which were under the control of the private sector. They have been denationalized. So in July 1969, 14 banks were nationalized, and in 1980, another 6 banks were nationalized. So total 20 banks were nationalized. And thereafter, so the government has given a direction to them, saying that certain sectors like agriculture, small industries, and micro industries, and other sectors also have to be given some finance. So the targets were given to them. So let us see what are the targets like. So government RBI has given a direction to all the banks, those who are having the operations in India and foreign more than 20 branches, to follow the guidelines like this. So for sector, the 40% of the amount to be given to the private. That means a bank gives finance. That means 100 rupees, if any bank is giving as a finance, 40 rupees should go to the priority sector. So and about 18 rupees should go to the agriculture sector, of which another 8% should go to the small and marginal farmers. Within the agriculture, 8% should go to marginal farmers, and 7.5 rupees should go to the micro enterprises, and 10% of the amount of advances to any bank, it must be given to the weaker sections. So these are the targets. I'll repeat it. 40% of the any bank's advances should be given to the priority sector, and 18% of the advance should go to the agriculture sector. 8% should go to the small and marginal farmers within the agriculture sector. Micro enterprises 7.5%, and weaker sections 10%. So these are the targets given by the Reserve Bank of India. In the case any bank doesn't fulfill these norms, these targets, they have been asked to invest in the bonds of NABARD or RADF at a lower rate of interest. So all the banks necessarily will be giving the finance to them, because this private sector, they'll be getting a higher rate of interest rather than the bonds in the NABARD and other things. So indirectly, government has given a pressure on the banks to achieve these targets. Okay, so what are these priority sectors? What are the sectors which constitute the priority sector? Let us discuss one by one. So agriculture, because agriculture, nearly about 60% of the population dependent on agriculture. So until unless this agriculture is covered by the banks, so the country will not prosper. And small and micro, small and medium enterprises, we call it as MSME enterprises. Roughly about 3.5 crore population, there's a enterprises are dependent on this MSME sector. Roughly 3.5 crore people are working under the small and marginal small, medium and micro enterprises. Export credit, education, housing, social infrastructure, renewable energy and others. So these are the sectors. The RBI has given a directions that all these sectors put together 40% of the amount should go to the sectors. So let us individually discuss what are the sectors. So what constitutes the priority sector? What is a priority sector like? Agriculture. So let us discuss in our next class because it requires a lot of coverage. So I will cover the agriculture sector in the next class. Other sectors let us discuss in the present class. Agriculture let us discuss in the next. Okay. Then we have seen in the earlier slide that 10% of the amount of priority sector total advances should be given to the weaker sections. That means 100 rupees is the bank finance for any sectors. 10 rupees must be given to the weaker sections. 10%, lot of focus on the weaker sections. So let us see who are the weaker sections. Small and marginal farmers. Small and marginal farmers means small farmers below 5 acres or 2 hectares. Marginal farmers below 2.5 acres or 1 hectare, because 1 hectare is equal to 2.5 acres. So small farmers below 5 acres or 2 hectares, marginal farmers below 2.5 acres or 1 hectare. The next one is artisans, small artisans, village industries, cottage industries, small who you can find out in your own area who are the small industries, cottage industries, where the loan requirement is 1 lakh rupees, where the loans are given are up to rupees 1 lakh. They are covered under weaker sections. Beneficiaries under the government schemes, several government schemes are in force now. Probably you must have in your own area because it is varying from state to state. So I'm just giving an example like NRLM, then NULM and the Scavengers Rehabilitation Scheme. So these are the three major schemes implemented by the Government of India throughout the country. Then scheduled castes and scheduled tribes. All the loans given to the scheduled castes and scheduled tribes are covered under weaker sections. Whatever may be the amount, irrespective of the ceiling on the amount, the loans given to the scheduled caste and scheduled tribes are categorized as weaker sections. Then banks are giving 1% of their advances to the weaker sections at a very low rate of interest, that is a 4% per annum. What is an average rate of interest by banks in other sectors? It could be 9%, 10%, 11, 12%. But whereas for these weaker sections, banks are giving at 4% per annum rate of interest. Then self-help groups, which you find in your own area, small, the people who are working for the same profession. So they will be forming a group, and for that self-help groups. So in other sector, we'll be discussing about self-help groups. What are the self-help groups? And distressed farmers. Some farmers, because of their inability, they are into the debt trap. So what they do is they mortgage their property with a money lender. They mortgage the property with the money lender by and take some finance. So whereas money lenders, they will not give at a lower rate of interest. They charge about 36%, 40%, 50% depending upon the requirement. So is a very high rate of interest money lenders will charge. So the farmers, they are unable to come out of the debt. So their all properties are mortgaged to the money lenders, and they're always permanently indebted, permanently loan is to the money lenders. They cannot come out because the rate of interest is very high at 40%, 50% rate of interest, which they cannot afford. So they borrowed it, but they cannot repay it. But their properties are mortgaged there. So to rehabilitate or give a relief to these farmers, so banks can give some finance to the extent of about 1.5 lakh, 1 lakh rupees to get back those properties by paying to the money lenders. Whatever the amount is given, 1 lakh or 50,000, whatever the amount is there with the money lender, to that extent banks will finance and the property can be redeemed. So over a period of next for 10 years or something, this loan can be repaid to the banks in a easy, convenient interest loans. Okay, and similar to this, there are other than the farmers are also into debt trap. They also borrow money from the money lenders at a very high rate of interest. They may, instead of land, they pledge their houses or gold. They can pledge at very high rate of interest, and they are on permanent debt. So to give a relief to these these persons, banks can give up to 1 lakh rupees to get a relief. Individual women to the up to 1 lakh rupees, whatever the loans given to the individual women beneficiaries up to 1 lakh rupees, they are covered under weaker sections. And physically disabled people or specially disabled people, whatever the loans are given to them, they are also under weaker sections. Another one is under Jan Dhan Yojana, Prime Minister Jan Dhan Yojana. Up to 10,000 rupees overdraft can be given. Even these loans are also covered under weaker sections. And whatever the loans are given to the minority communities, so the loans are also categorized as weaker sections. So minority communities, state governments will be declaring who are the minority communities within the state. Okay, so these are the weaker sections. 10% of the amount should go to the weaker sections. So that is a target given by the Reserve Bank of India to the banks. Then let us see what are these MSME categories. For MSME, there are two types of enterprises. One is a manufacturing enterprises, another one is a service enterprises. Manufacturing means maybe your textile units or processing units or iron industries, whatever is that, where the plant and machinery cost is given here. Okay, and service enterprises, maybe your saloons are there, maybe your business enterprises, groceries, all these investments will be covered under service enterprises. In the manufacturing industries, the plant and machinery cost is the criteria. It is not the loan. It is the cost of plant and machinery equipment. Cost of plant and machinery is the criteria. So the cost of machinery is up to 25 lakhs. They are classified as a micro enterprises. And if the cost is below 5 crores, that means 25 lakhs to 5 crores, they are classified as a small enterprise. And 5 crores to 10 crores amount, they are classified as a medium enterprises. This is the, I'm repeating it, it is the cost of plant and machinery here. Okay. Similar to this, service enterprises, the cost of equipment is the criteria. The cost of equipment, if it is below 10 lakhs, they are classified as a micro enterprises. From 10 lakhs to 2 crores, they are classified as a small enterprise. And 2 crores to 5 crores, they are classified as a medium enterprise. So whatever the loans given to these sectors, either manufacturing enterprises or service enterprises, there is no cap. It can go up to 100 crores also. There is no restriction on this. But only plant and machinery cost is a criteria. Whatever the amount banks lend it to these sectors, they will be automatically classified as a priority sector. Okay, and all the loans given to the khadi and village industries, they are classified under micro enterprises. Automatically, there will be weaker sections. Okay. So next segment where the priority sector classification is export sector, where the incremental growth in the business of that is incremental export credit is, suppose as on March 2018, a bank advance was about 1,000 crores. Let us see an example. of which export credit was about 100 crores. So 2% of the additional amount, that means 2% of the 1000 crores will be automatically increased to the export credit. It will be added to the export credit. To that extent, it is categorized as an export credit. To the extent of, that means 100 crores is already existing balance. In addition to this, up to 20 crores amount, it can be categorized as export credit. So, but only criteria here is the individual borrower wise limit should not be more than 25 crores. Individually, for one borrower, the amount should not be more than 25 crores and his turnover should not be more than 100 crores. Then only it will be classified as export credit and under priority sector. Next segment is education. So nowadays, the cost of education has become very expensive. Even to pursue one small degree course, it costs about 3-4 lakhs. For a medical profession, you don't think of it. It could be around 2 crores, 3 crores. It can go up to for medical profession. Engineering course, another 10 lakhs. Maybe suppose if he goes to other countries, the cost will be substantially higher, very high. It could be traveling cost itself is about 15-20 lakhs. The staying there, the education, everything, it's very expensive. So here the government of India thought that until unless education is given properly to the people, the country will not prosper. So government of India thought that some amount of their banks lending should be given to the education sector. So individually these education loans will be covering in other retail section separately, but whatever the amount given by the banks up to the 10 lakh rupees, it will be classified as a education loan. Beyond that, banks can give any amount, even up to 75 lakhs, 80 lakhs, 1 crore also they can give depending upon the requirement. But up to 10 lakhs only, the amount will be classified as a priority sector. Okay. Then housing. So housing is one sector. Not only the housing sector, if the housing sector is developed, other sectors, other related sectors also will also develop, like your cement, iron, your tiles, your paint industry. All these ancillary industries also will develop along with the housing. So government thought that the housing sector, if this sector is given a push, all other sectors will develop and economy will develop. So for this, in metropolitan cities where the population is about 10 lakhs, for purchase of a house, for purchase of a flat, or purchase of a second-hand house, or construction of a house on a plot owned by the borrower, or for giving a plot and construction of a house thereon, altogether the total cost of the house should not be more than 45 lakhs. And the loan given to the borrower should not be more than 35 lakhs. The criteria here is the cost should not be more than 45 lakhs and the loan should not be more than 35 lakhs. If the cost is more than 45 lakhs, even then you are given only 35 lakhs, but still it cannot be covered under priority sector because cost and loan put together, both these conditions have to be satisfied. Okay, and similar to this, in other places other than the metropolitan cities, the cost of the project should not be more than 30 lakhs and the loan should not be more than 25 lakhs. Then only it will be classified as a priority sector. Banks can give any amount, even some banks are giving up to 5 crores also, but it will not be classified as a priority sector. So this, you just remember this, the cost of the project in metropolitan cities should not be more than 45 lakhs. In another cities, it should not be more than 30 lakhs. And loan should not be more than 35 lakhs in cities and in other places 25 lakhs. So banks can give finance for repair of a house also. Here the cost is 5 lakhs in a metropolitan cities. And in other places, it will be 2 lakhs. Up to 2 lakhs, it will be classified as a priority sector. In addition to this, loans given to a slum clearance where the individual house is about 10 lakh rupees, then only it will be classified as a priority sector. And bank loans given for the any economically weaker section or lower income group projects where the individual house should not be more than 10 lakhs rupees, then it will be automatically classified as a priority sector. Here the cost of house should not be more than 10 lakhs in a community projects. Individually, I've given you the slab as 45 and 35 lakhs, but in a community project, individual house cost should not be more than 10 lakhs. In addition to this, for social infrastructure also, the government has given a stress that banks should give some amount of their finance to the social infrastructure, because social infrastructure is one sector, it will not give automatically good returns. So nobody wants to invest in the social infrastructure. So government is giving a stress on this sector so that the entrepreneurs will come forward and do the infrastructure creation there. So infrastructure means it could be schools and colleges, construction of schools and colleges. It could be hospitals, or it could be the village drinking water facilities, creation of village or purification of water, drinking water facilities for this. And in other places, it is a sanitation, village sanitation. It could be construction of toilets, etc. So for these sectors, up to 5 crores amount can be given by the banks. To the extent of 5 crores in each project. Suppose the construction of a school building or college building, the cost should not be more than 5 crores. So this is one sector where government is also stressing. So other sectors are also renewable energy. Renewable energy means we have got sunlight, we have got water, we have got wind. So these are the things which can be renewed. Not like other sources like coal and gas, etc. They are limited amount. So maybe they will last for another 100 years or 150 years or 200 years, not more than that. Thereafter, there will be no gas, no fuel, no petrol, no diesel, etc. So the countries have to depend on their own renewable sources. So now government is giving a stress on the renewable energy creation, where electricity can be generated by use of this sunlight, because in India we have got plenty of sunlight. So throughout the year, excepting 1 or 2 months during rainy season, all other seasons will be getting plenty of sunlight. So that sunlight can be used to generate electricity. Similar to that, wind power is, there are certain places where wind power is very high. They come at a very high speed. So that wind speed can be used to generate electricity also. I think you must have seen in your own areas where wind farms, the windmills have been erected in barren land. Even in the land also, in the agricultural lands also, they have installed windmills. So with these windmills, we can create electricity also. Similar to this, hydel plant, wherever the rivers are there, so they construct dams so that the water falls at a very high speed down the dam. When it falls at a high speed, so with that high speed, the turbines are moving. The turbines will move. With that, electricity will be generated. Similar to that, biomass also. We have plenty of biomass, like your wheat grass or paddy grass, or maybe your sugarcane bagasse, etc. That can be used for creation of electricity. They'll be burnt. By burning that, electricity is generated. For all these facilities, we can give a loan up to 15 crores for the projects. For all these projects, we can give up to 15 crore rupees. Banks can give. Even for street lighting, maybe for municipalities or gram panchayats and etc. So they can give finance for erecting street lights, etc. And for all these projects, like maybe solar power or wind power, street lighting or biomass power, mini hydel plant, etc., they can give loan up to 15 crores. That can be classified as a priority sector. Okay. For individual houses also, suppose individual house, we want to erect a solar panel on our head, on our roof. With that also, we can generate electricity for requiring for the consumption of own electricity. So we need not depend on other electricity, and that saves our electricity cost. Maybe we are spending about 4,000, 5,000 rupees a month electricity bill, so that can be saved. So here, banks are giving loans for individual households also up to 10 lakh rupees for erecting windmills, maybe the solar panels on the rooftops. So for there, the government is also giving a lot of subsidy for these facilities also. Okay. So these sectors which we have covered are under priority sector. We have seen that agriculture, MSME sector, we have seen that education loan, we have seen export sector, we have seen renewable energy sources, we have seen other facilities are also like social infrastructure, etc. Now let us see what are the common guidelines for priority sector. So all the banks need to follow certain guidelines for priority sector classification. One is the rate of interest is decided by the Reserve Bank of India. The Reserve Bank of India will be communicating the rate of interest to the banks. What will be the rate of interest? All the banks have to follow uniformly the rate of interest. Then service charges below 25,000 rupees, banks should not charge any types of charges, maybe processing charges, visit charges, inspection charges, etc. No charges should be levied on the priority sector loans up to 25,000 rupees. And banks have to maintain one loan application register. In the loan application register, banks have to maintain when the loan application is given, when the loan application is processed, when the loan application is disbursed and sanctioned, etc. All the details have to be filled in the application register. This application register will be verified by the Reserve Bank officials and controlling office of the banks, etc. Our government also will be verifying the records whether the banks are following these guidelines or not. Because for small loans, within 15 days the loans have to be sanctioned. From the date of giving the application to the sanction, it should not be more than 15 days. So depending upon the amount of loan, so it could be 15 days, it could be 1 month, or it could be 2 months maximum. But the branch manager is not authorized to reject the applications of a priority sector. He is not supposed to reject at his level. If at all any rejection has to be done, he has to send the application to the controlling office of the bank. Maybe his regional office or maybe zonal office. The proposal has to be sent. Then they'll say whether it can be rejected or not. The individual branch manager is not supposed to reject the applications. Okay. And whenever any application is given to the bank, they need to give an acknowledgement. The moment the applicant gives a sanction, the application to the bank, he need to put a stamp and give an acknowledgement when the application is received, because that becomes a proof. From that date, another 15 days time will be given to him to sanction the loans or reject the loans. Okay. So these are the common guidelines given by the Reserve Bank of India to the banks. So they have to follow the guidelines properly. Let me sum it up. The banks are supposed to give 40% of their loans to the weak priority sector. 18% of the loans should be given to the agriculture sector, and 8% of that, within that 18%, 8% should be given to the marginal and small farmers, and 7.5% to the micro enterprises, and 10% of the amount should be given to the weaker section. These are the targets the banks have to follow, and the banks have to follow certain guidelines. They need to maintain an application received register, and then below 25,000 they should not charge the processing charges. The rate of interest should be common for all the banks. It will be given by the Reserve Bank of India. Within that, all the banks have to follow that rate of interest. So these are the certain guidelines given by the Reserve Bank of India to complete the formalities. I think I've covered the priority sector. What are the priority sectors? What are the targets? So what are the other sectors where we can do the lending? And in the next class, we'll discuss something about agriculture sector.